Hello folks, Brandon Chapman with you today. It's another Monday video for TheoTRADE for December 4th, 2023. The question is the bullish squeeze out of juice? So we're going to look at the short squeeze, stocks that are experiencing a short squeeze. We're going to look at some option activity in those stocks that are experiencing a short squeeze. And we're going to look at some bearish trades developing in some other parts of the market. And again, we'll try to answer the question, is there room additionally for some of these areas to run, or are we running out of juice or running out of momentum in this rally? Now, if we look at the MES today, notice that we kind of gap lower on the session, we opened up similar over the weekend on the session. We traded lower and we finished right about at this level, about 45.73. Now, I'm going to carry this over to the SPY in that there was some significant prints that occurred, or a significant print that occurred on November 27th last week, 1.19 million shares at 455.36. So this is a level I've been watching all week, and notice how the market has responded to it, basically being the high of the session or near the midpoint of the session, closing below it, opening at it, trading higher, opening up lower, trading higher, and today, again, opening up near that level and trading higher. And so notice that we're adding some significance or additional significance to that point or print at 455.36. When you get these large prints like this, and you can see this under Trade Flash when you have 1 million prints or more, but the prevalency of these have increased. And again, these create instantly significant levels going forward. So the fact the market was able to cling to on the open today at the cash open, it was able to trade higher then, does support it. But I'm kind of looking at the lines around the high and low of this particular candle right here. And so we'll kind of take the high of that one and the low and looking for kind of a breakout either above or below to help signal. I realize we did close slightly above that on the first and then we rip lower today. But the idea is if we can really gain any traction above that level or below that level, we're probably looking at the next stage of the market. Now, as you look at that, we break to the upside, the limitations of the upward movement are real. Why? Well, if we look at skew, this gives you an indication, right? Skew yesterday or Friday was at 145. Well, 145 handle in the skew, anything north of 130's high, 145 or higher is extreme. And all this means is, as we go back to the S&P, is that you generally expect to see a higher frequency of small up days with the potential of a large downside move. So we might be able to grind it out here to the upside, which means our upside's more limited, but our downside is significant. That's what skew means, right? Or negative skew means for SPY. We're going to look at some high short interest stocks where it's actually skewed the opposite direction, where the risk is to the upside rather than downside, but you do expect to see high volatility. Then we start to look at volatility itself, the VIX, the 3-month VIX, divided by the 30-day VIX. And this finished today right about 1.2, and we've been up there for several days over the last week. And what this says is the market's expecting a lot more volatility in a 3-month window versus a 30-day window. And when you combine the skew and this term structure here, you're basically looking at a 5 to 10% correction in the coming 3 to 4 weeks. And I realize that kind of dovetails with the end of the 2023 trading year. But again, frequently we've had sell-offs going into the end of the year. So what I'm suggesting is with the VIX currently down here, scraping the bottom of 13, the risk right now is the downside. Now, the market may have the potential of eking out some small gains here. But when you look over to the left-hand side, what you'll see is that technology, XLK, was down 1.22% today. Right? Normally, technology and cyclicals should be leading during bullish times. Why? Well, those are the highest beta parts of the S&P 500, and that is what's weighted the highest in, if you look at SPHB, for example, these are the two highest weighted sectors. Had a very good day on Friday. Today, we kind of gapped lower. We rallied. We finished near the high of the day, in part because you're looking at companies like CCL in there that are big holdings, NCLH, a lot of travel stuff. And you've got, well, I guess I might have it over here. I might have it up, but I do not actually. So I don't have it up to bring it, but if you look at the top holdings in SPHB, in fact, I might have it over here. SPHB. Do I got it? It looks like I do not have it in there. So anyway, that's public. Personal SPHB top holdings. So when you look, CCL, Solar Edge, Para, that's Paramount Global, Generac. And you look at the performance here in the last 3 weeks, these have been top from Manpower. Tesla's up 10%. It's been kind of going sideways here. Caesars got a nice breakout on Friday. You get a sense of, okay, look, I mean, a lot of these, performers today, these are some of your higher short interest stocks like a CCL, for example. And so again, we're still seeing the squeeze happen, and it's kind of becoming more pervasive, right? Stocks like Carvana that has very, very high short interest. There was bullish option activity last week and today as well. Carvana was an 8 December 40 strike. So we're basically at the money. But look, if this squeezes, this might be the breakout day like we saw back here on the 10th, which led it to a target about 55. So if the squeeze continues in something like Carvana, a 55 handle would not be unreasonable, right? And then expect it to break down. The company did get an upgrade today from a price target from 25 to 40 by JP Morgan. But again, this is helping facilitate it with the option activity, again, on this 8 December expiration on the call side at the 8 December $40 strike price right here. So again, we're helping facilitate this squeeze, gamma squeeze, short squeeze, where this, again, if we get traction above 40, we may see further pressure driving it to 50, 55. And given the fact this company does have a lot of short interest, the rising call volatility makes it easy to set up a what? Set up a long call vertical, buying lower vol, selling higher vol. You can go shorter amounts of time if you want to have tighter spreads between the strike prices, or steeper skew if you go even shorter, like come down here, for example. Actually, that's kind of flattened out a little bit. Sometimes it's steeper, sometimes it's not. But 107% to 111 is a pretty big step up. 107 to 109, again, a bigger step up. You can construct a $2 wide spread there with a $41 target. And again, you're not too far out of the money. You trade up to north of 45, you have a chance of probably closing this out. So Carvana is one. Coin today. A Bitcoin had a big breakout. Coin's kind of responding to that, /BTC. Broke out to 42,000. Gold today, /GC. You can kind of see how the dollar's doing. Traded a record high before falling back today in gold. The dollar right now is deteriorating as the Fed's expectations for next year. We're looking at a 1.25% rate cut by the end of the year. We're looking at a 0.25 point by March meeting, at least meaning there's a greater than a 50% chance of that. And so everything's kind of causing things to really squeeze higher. And again, these high short interest stocks like Carvana, Coin, SOFI again today. This is one I talked about with our members and a setup down here. I closed that sucker out, and then all of a sudden today it started to break and faded. But on SOFI, we're looking at a December 1050, right? 1050 is up here. In a short squeeze, could it get there? Absolutely. Look at the short squeeze we saw in May and June, for example, in January. These stocks have significant potential upside. But again, it's not necessarily certain that that's going to happen, but the volatility structure on these kind of stocks here, you see the volatility is rising. You could buy a 9, sell a 10, or go to a 12 Jan, buy an 8 and sell a 950, right? So again, so the skews kind of going against that one now. It's changed a little bit from what we looked at earlier. Sorry, 850. It was a 7, 850 we were looking at earlier. But it's buy a 7, sell an 850. So it's gone up or shifted a little bit from what I looked at it earlier. So it's changed. But you could construct an upside spread here, 8 and 9, buying 63, selling 64. Again, cost you about 33 cents. Not bad for a $1 wide spread. And again, we need $9 in that case. So there's opportunities to create these kinds of spread strategies on these kinds of stocks. Let's look at CGC. And this is one that it kind of tipped its hand last week with Tilray. And I'll look at Tilray here, but these are generally higher short interest stocks. It kind of tipped its hand here. And today we're experiencing a nice breakout in Tilray as well on significant volume. And you look at past points, again, that July timeframe, we got a last gasp short squeeze here. I had a spread on to ride out this kind of consolidation that it finally broke out in my direction. But CGC today, again, Similar activity, right? Breakout in the stock, high volume. Is this a beginning of a short squeeze a la August 31st? Maybe, right? But on CGC, this is a Jan 25. It's way the heck out there. But again, this is an indication of money flow in here. 46,000 contracts at the 250, mostly bought in CGC. So again, we're seeing bullish option activity coming into, helping to create these conditions where we may see a big move higher. And as you look at CGC, and if we look at a shorter amount of time, like a 19 December, see how the volatility is increasing as you move out of the money? This creates an opportunity to buy a lower strike and sell a higher strike and create some sort of edge. 1.5. What does that look like? 50-cent spread. Again, very, very cheap. Maybe you just buy the one in that case for 9 cents and ride that sucker out. If you get the squeeze, if you get to 150, that option's worth at least 50 cents. You get to 2, it's worth at least $1. It may be worthwhile to throw something out there for $9 a contract. Be willing to risk it all. Probably trade a little smaller, but you got 46 days for this sucker to move. If we go to, let's say, 1.25, roll it. Roll from 1 to 1.5, right? Get to 175, roll from 1.5 to 2, and keep booking some profit and taking it out of it through rolling, but starting with a $1 strike price, again, out of the money, purely based on a squeeze. It may not be a bad way to approach that activity that we're seeing today in CGC. Another one in BBWI. Bath and Body Works, huge move today, 8%. I did not actually check this short interest on BBWI. I was assuming it was probably higher. It's in that retail consumer cyclical space. They generally have a lot of these. It's not tremendous. Okay, 4.4%, 2.5 days. Not a lot there. So maybe I hold off on this one. But the BBWI, it was an 8 December 6th. I wrote down the wrong strike in here. Great. It wasn't a good one anyway, but anyway, let's look at the 8 December time frame here. Yeah, it was a 36 strike. I just wrote down 650, but it was 36 strike on the 8 December. So again, we're seeing long call activity come in here, 36. And again, can create a gamma level at 36 that may help us squeeze it higher. But again, this was tougher, right? We've made a very, very profound move. And so this speaks to, is the market beginning to lose some steam? And this is where you start to look at something like, for example, an XRT. XRT's made a huge move. We're testing prior highs. This is retail. Retail's seeing some big moves. Stocks like, for example, Macy's have gone gangbusters, among other stocks. Is this the end of the line for this space? Today, XRT, there is a March expiration on this one. So we come out here to March, and we're looking at this strike right here at $60. Someone's taking a stab at the 60. Now, again, is that hedging? Maybe. Is it a trade? Possibly. Point being is it doesn't matter, right? This creates an imbalance where if someone's buying puts, guess who's selling? 51,000. You're going to have the market makers selling, which means they have exposure, meaning they've got to short the stock. Hasn't affected it today. This is an ETF, so there's not exactly the same kind of equivalence as with individual equities, but it is an indication, and $60 is basically back to prior lows. The nice thing is skews generally favorable for constructing downside spreads, and you could start with something closer to the stock price like a 67 or even a 68 and sell a 66. It may cost you there about 86, 88 cents, or you come out here, maybe it costs you 72 cents, like a 67, 65. Basically, you need this thing to pull back in the next 42 days, which there's probably a decent chance of this thing pulling through to about the 65 or 64 strike at some point in the next 42 days, giving you a chance to close that out. Another one, this is more in the real estate space, IYR. Okay, IYR is up today. You may look for a turnaround. You may try to fade this move here today. IYR certainly benefiting by the fall in yields. For example, in TNX, we've had a very, very big move in treasuries. Would make sense if yields start to reverse a little bit here. And certainly that places pressure on IYR. Typically, we gap lower, we traded higher. We did form a higher high and a higher low today. But IYR specifically, and I've got a trade on this that got blown out, but this is a December 85 right here. So I put one on back here. It was good. And then all of a sudden just had this huge breakout with this move in yields. And again, 85, we're looking at a pullback here. So as we look at the trade on IYR, again, a December expiration, we're seeing trade here at the $85 strike price. Give yourself a little more time. Go out to Jan, for example. Volatility is rising. You buy the lower vol, sell the higher vol here. You could buy an 86 and sell an 84. It's going to cost you about what? About 67 cents on a $2 wide spread. $84 is right here. You trade to or through $84, you're probably up 50, 60, 70% plus at that point. Maybe you decide to shut it down. But the idea is this isn't a terrible setup here for fading this rally. So long some of the high short interest, short squeeze stocks in this last gasp, while looking at bearish trade and some of the stuff that's performed really well like IYR. And also this one hasn't had significant option activity today, but XLK, this was kind of my bet last Wednesday for our members. We do a Wednesday class or Wednesday hour session. Blake and we talked about our bullish and bearish trades. Mine was Microsoft going into the end of the year. It's had a couple of bigger down days here. XLK was a poor performer today. NVIDIA is in that mix as well on the bearish end, looking for it to retest highs. News that potentially there's filings where insiders in NVIDIA are trying to sell shares. So again, makes it interesting for the stuff that's performed so well to eventually become an underperformer and see it reverse. A stock in this kind of real estate space is Redfin. It's been grinding it higher here. Volume's been diminishing in this rally. We're down a little bit today. But again, today's trade in Redfin, this was a May expiration out here. And again, are we looking for the housing market to cool, that kind of thing? A $6 strike, bearish money flow into this May expiration. Again, you can look at tackling, buying a 7, selling a 550, buying a 7, selling a 5, buying an 8, selling a 550, for example. Any of these work because the volatility is rising. We're buying the lower vol, selling the higher vol, and capitalizing on a potential downside move without too much negative theta. AXE, this kind of speaks to the strength in in commercial banks, regional banks and financials generally. This was my other bullish trade last Wednesday I ended up closing out my KRE today in strength. It was a call spread of 44.46. It was a 46.48. But again, we're looking at this rally here today, and all of a sudden, there's some bearish activity popping up in stuff like XLF, for example, and AXE, financial stocks. AXE made a huge move today, back up to prior highs. Is this a setup for the downside? And again, I think we've probably run our course just a little bit, but in this case, it was a January expiration, buying 5,000, selling 2,500 to 2,750, a ratio spread favoring the long puts, buying 60, selling 1, buying 2 at the 60%, selling 1 at 95% to reduce cost. Seems like a pretty reasonable trade. You're not naked, but look at the strike price they're trading here, 40 and 27.50. So again, we're looking at major downside potential here, trying to hedge or otherwise trade downside in Axos Financial. And again, this may spread to XLF generally, as this is a pretty big move we've experienced. There was some bullish option activity in Wells Fargo and stocks like Hood. Hood is a short interest stock, right? It's a company that has high short interest. It's made a nice move. So it's kind of stepping outside of just being a financial or just a broker. But on Hood today, it was the 8 December 1050 strike. So again, we may have a further squeeze the upside here, but other parts of the financial sector could begin to deteriorate. We'll finish it up with ARK and FXI. ARK is one that has significant holdings in Coinbase, which made a big move today, part of that short squeeze. Roku, same scenario. Path, which also has high short interest, it's had a big breakout last week. And so ARK is one that, again, if the short squeeze continues, should probably perform relatively well as we approach our highs back to 51. This was a Jan 52 traded today. Again, gives you kind of a short-term upside target. The question is, do you trade it now on the bullish side, or do you wait for the bearish setup on this kind of stock? Probably better off to wait for the bearish setup, but there's probably a little bit of juice left in this tank. I've been saying this for a little while now, but the option activity is still skewing more favorably after a bearish turn last week. So I'm taking the bearish side. I took it right there. We were kind of going against this trade. We could squeeze the 50. With the January expiration, I have time for this to come back around again. So again, I think there's probably a better opportunity to see, can we get to 50, maybe 51? And that's where you might look, or looking for a turn like I did last week. But there was a big contract coming, like 29,000 contracts coming in on the November 30th on ARK. But again, the short squeeze continue to push in a lot of in the stock. This index or this ETF has a lot of high short interest companies. And finally, FXI. This is one that's not ready yet. We've seen a lot of activity on the bullish side in FXI, waiting for this to turn. But this was a nice one last year in November, leading into the beginning of the year. If the dollar begins to weaken and some of China's initiatives may help create a short-term squeeze in these kind of companies. So I'm watching this for this week to see if we can see a turnaround here. This FXI was on February 26, 28, which happens to have some decent skew for this kind of trade, buying the 26 at 23% and selling the 28 at 24%. So there's a little bit of an edge in the volatility there that's benefiting the upside. Folks,